Hi, this is Barbara Claire Jones and Company. I'm working as a realtor in Southwest Florida. As you know, mortgage rates are one of the issues keeping people from buying homes because they think they're unaffordable. Rates have more than doubled over the past 5 years. So to provide information to the public, I invited mortgage expert and mortgage lender Larry Brewster to my channel to explain some of the ways you can get around this. He works fast and efficiently. Close in 2 weeks is realistic. And Larry will be upfront and tell you if you won't qualify. So give him a call if you're looking for a loan, and he'll have all the information for you. So Larry, what do you think is going to happen with rates?
Currently, mortgage rates, like I said, have more than doubled over the last 5 years. And we're going to see mortgage rates probably this year stay in the low sixes to the low sevens. A lot of volatility.
Yes. No, there's nothing we could do. It's a lot of political, a lot of changes in finances. And I think the shock from rates going from 2.5% to like 6%, very quickly, it was a shock.
It is. And I think a lot of people, have that 3%, 2% in their mind. Again, people have to realize that, we were coming out of COVID-19, the pandemic, they were trying to install, people to move in the economy. So we lowered rates, considerably. But when you really look at it over the last, since like 1970 to current, mortgage rates have been 7.73. So that's been the average mortgage rate over that period of time.
No, that's
Since
true.
then, we're talking rates here. And with that volatility in the markets, it's just going to be, like I said, again, we have, tariffs, we have the Fed, we have earnings, potential recession area information. All of that's going to take effect. So we'll probably see this volatility through probably the end of the year.
Right. But a recession would bring rates down.
Correct.
Yeah. It'll bring prices down too, but that would mean possibly there'll be less buyers because they won't have the income. So
that is correct.
That's that. Correct. Okay. So we're never going to see 3% again.
I find it highly unlikely in my future.
Okay, me too. I don't think so because that was just an oddity, and I think it was because of COVID and a bunch of other issues and a lot of weird things were happening. But a rate of 5 and 6 is kind of considered the normal. 5 is pretty good, but even up to 7, it's not bad. But I think home prices have to reflect the mortgage, and so far they aren't. Sellers are holding out for higher prices, but we'll see. So what is a mortgage buy down? This is one of the ways people are getting around higher interest rates and an affordable monthly payment.
For sure. So like I said, let's just say the average interest rate today, let's say it's 6.75 when you're looking. You have the ability to buy that rate down permanently. And that permanent buy down, what I mean is that you could pay 1% of your financed amount. So if you finance $500,000, that would cost you $5,000. Mm-hmm. And let's just say we need three of those 3% points or discount to buy it down. So you'd be looking at $15,000. So with that monies, we would take the loan and say, okay, instead of 6 3/4, we'll take you to 5 3/4. And that's a permanent buy down. So it's permanent over the balance of the 30 years.
So if you're getting into a home and you're planning to stay there a while, that's excellent. And it's better than reducing the sales price, correct?
Correct. Exactly. Because by reducing the sales price, you have to realize the loan's been amortized to your payments over 30 years. Mm-hmm. So for every $1,000, let's just say it's a little over $6 so that would be roughly a little over $60 for $10,000.
Yeah, that's not much.
You're not going to save as much compared to if you saw a 1% drop in the rate. So maybe when looking at a house, if they're asking 5, then you could get it for, 485 or whatever the numbers work out to be. It might be more, behoove you more to use that concession to buy your interest rate down.
Okay.
Or that's just a great way.
Yeah, no, it makes sense if you're going to stay in the home. If you're going to be in and out like a 2-year, 3-year thing, it probably does not make sense because you won't make that money up.
Correct. Exactly. Your savings versus what it costs you.
Okay. Another thing I'm hearing about is assuming the seller's mortgage.
Yeah. So, with the lower interest rates, sellers who carry FHA and VA mortgages primarily have an assumability feature.
Uh-huh.
So if a seller has been in the house, let's say since 2020, they have a 3% mortgage rate, they've paid on it for 25 years. As a borrower, you could come in and assume the balance of their loan. The key takeaway is really what you're going to do is pay the difference. So if the seller owes $300 and is asking $400, you have a $100,000 gap that you'd have to make up. And that
Okay.
would either have to be made up through your own cash or trying to be able to structure it with a first and second mortgage.
Okay.
Which,
But that would
to
make
do
sense
that.
then, because you're saving some money, that's for sure.
Yeah, that's correct. And in the only, and like I said again, in generally, it takes a little bit longer to process. The processing times on those are because each specific loan servicer or bank, whoever you're making your payments to, are going to have their specific requirements as to what documents and how they do it, and how quickly they're going to move to get the loan, approved, because that seller has to be released of financial responsibility before it closes.
Absolutely, they do. Because nobody's going to sell their house and be stuck with a mortgage.
For sure. No, exactly. Yeah, no one wants to, owe on something they no longer own. So,
Right. Okay. But that could be also very beneficial. Saving.
yes,
So that's a good thing. Well, I think we kind of covered everything. But I'm kind of thinking prices will go down to absorb that, and that's when it's going to happen. But it's a great time to be a buyer right now. The choices out there are phenomenal, and buyers are willing to negotiate. They're not in the
yes.
driver's seat any longer. The buyer is in the driver's seat now.
Yeah, correct. We're seeing more sellers, more apt to take reductions in price, offer concessions for buy downs or closing costs. And again, just because, again, they have the inventory, so buyers have a lot to look for.
Right.
So seller can make it more attractive.
Before you go shopping for a house, it's very important to get pre-approved, not only so the seller knows that you're credit worthy, but also for you. You'll get a good faith estimate. You'll know exactly what your monthly costs are going to be.
Exactly. Exactly. And that's part of the whole process. Yep. Know before you go, know how much it's going to cost you, what your payments are, have your financial, and that'll make just a much smoother mortgage transaction and purchasing transaction from application to close.
Absolutely. Well, I think we covered everything. I might ask you back on if there's any fluctuation or movement in the market, but it was good. Okay.
Yeah. So I appreciate the opportunity.
This is Barbara Claire Jones and Company, and this is Larry Brewster, my favorite mortgage lender. Okay.
Thank you.
Talk to you later.
Back
Bye-bye.
to you. Bye.
Bye.